Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for Wednesday, October 19th, 2022. It's great having you with me here today. And we got our first look at housing for the month of September. Yep, we're in the third week. We get housing numbers, and we have existing coming tomorrow. But our first look is at new housing construction. We look at starts. Importantly, we look at closures or completions, and then, we look at permits. This tells us how things are going. Not surprising because we had a good number last month. We expected starts to be down, and they were down. So yes, the impact of higher interest rates, higher prices, and I would actually argue the delay at completing structures has weighed on it. If we look at the buying index, this is a number put out by the National Home Builders Association, and they look at how interest levels are in showrooms. People coming in, what are people saying? Are they eager? What's their timing? All of those factors. And we've gone down for the ninth straight month. We're now under 40, and that tells us it's pretty barren in terms of interest out there. Builders are reflecting that, and their eagerness to start houses are not that high. Good news is we're seeing completions. We see completions actually rising. We've had material problems, lumber prices, just getting garage doors have been a struggle for many home builders. Completions are starting to move up, and that's a good news. So hopefully there'll be some more starts going. And remember, on the housing front, we continue to miss housing units. If we look at the 2010 decade, what we see is just the absence of housing completions. Not surprising when we came out of the great financial recession and housing had been down. But now there's a need. And at the end of the day, and we'll see this more tomorrow, inventories for existing homes continue to be under the long-term average. Even with prices up, even with interest rates up, there's not the interest to sell someone's home where you'd expect. The economy's been pretty decent and prices have been up. This may be a time for people to downside, to relocate, and to do those types of things. We're not seeing it. So yes, there's not going to be relief to the housing market from the completions. On the good news also is we're starting to see permits move up. Permits is actually the leading indicator. These are the 10 indicators that the Conference Board looks at to sort of project the next 6 months for the economy, and also gives us a sense of how the market is looking at things in the future. And this leading indicator is actually moving a little higher, so that's a good sense. So permits are starting to flow. So there's some thought out there of, as things are completing, that they'll start new construction, but the interest rates, inflation, and the economy with energy prices is still holding back the housing market, and we'd like to see it do a little better. Another shout from yesterday, we should just be noted, is got the Fed minutes, and this goes back to the previous meeting in the previous month. What do we see? We see a little sense, not in the formal votes, but in the debate, some disagreement among Fed officials. Most of them prevailed, and all of them voted for the 75 basis point hike, but 2 actually wanted less of a hike. So we're not seeing a unified front. One was on the other side going for 100 basis points. So a little bit of lack of confidence among certain Fed officials that this inflation element is worthy of even higher interest rates. And that's what we have to see, because once the Fed stops increasing rates or slows down the rate of increases, we pretty much see the end of the tightening cycle. So we want to keep that in mind as we move towards the beginning of next month, when we have the next meeting and expectations still running around 75 basis points for the hike then. This is Scott Murray, the Daily Economic Market Shout. Thank you for joining me here today.